Hello everyone, welcome to Commerce Logic. Today we are going to discuss about working capital management. Now let's see what is working capital management, and before going into the discussion, let's see what is working capital. The capital required for meeting day-to-day expenses is said to be as working capital. This is what I have given here. So what is working capital? The expenses which are required to meet in a daily expenses. So for that we need some fund. That fund is said to be as working capital. So working capital is also called as circulating capital or revolving capital. And this working capital management comes under investment decisions of financial management. Then working capital is calculated by using the following formula. That is working capital is equal to current assets minus current liabilities. Now we'll see current assets. Now we'll see what are current assets. Current assets include cash, bank, debtors, bills receivable, inventory and other current assets which have very shorter period of time, that is which derives benefits which is less than 1 year. Now we'll see about current liabilities. These current liabilities include creditors, bills payable, bank overdraft and other current liabilities. So these are the things, these are the liabilities which are repayable within 1 year itself. Those are called current liabilities. If current assets exceeds current liabilities, then it is called positive net working capital. If current assets are more than current liabilities, then we call it as positive net working capital. Next, if current assets are less than current liabilities, then it is called as negative working capital. See, if current assets are more, then you remember it is a positive net working capital. If current assets are less than current liabilities, then it is called as negative working capital. Then we'll see next. See, the time gap between happening of first event and last event is known as operating cycle or working capital cycle. What this operating cycle and working capital cycle includes? First one is procurement of raw material and services. First you need to procure raw material. Next, second one is you have to convert raw material into work in progress. Then third one is again you have to convert work in progress into finished goods. And next, after producing these finished goods, you have to sell them. After selling your finished goods, you are going to receive. Then now we are going to study about raw material conversion period, work in progress conversion period, finished goods conversion period and inventory conversion period. Now we'll see what is raw material conversion period. The period for which the raw material is kept in store till it is issued to the production department. Unless the raw material is issued to the production department, it is stored in the warehouse itself. So immediately when it is going to converted, first step is it is going to be sent to production department. The next, work in progress conversion period. The period for which the raw material remains in the production process before it is converted or taken out as a finished goods. See, first we procure raw material, then we will put that in process, and that process, for that process we require some time period. That time period is called as work in progress conversion period. And after work in progress period, the next step will be finished goods. First we procure raw material, then work in progress, that is we put that raw material in process, then finally we will produce finished goods. So the time taken to produce these finished goods are called as conversion period, and the period for which the finished good remain in the store till they sold out. The period involves that when as soon as the finished goods are produced and they remain in the store, and that period includes the goods which are sold out. Next, inventory conversion period. This is all about raw material conversion period plus work in progress conversion period and finished goods conversion period. The inclusion or the summation of the above three things is called as inventory conversion period. See, to produce a stock, to produce a final stock, to produce final good, we are first procuring raw material. Then we are putting that raw material in process. After that process, we are producing finished goods. After producing that finished goods, we are selling out them. Then these three are involving process is called as inventory conversion period. Next, we'll discuss about the factors determining the requirement of working capital. Types of concern. This is the first factor. In case of trading concern or business, less working capital is required when compared to manufacturing concern, because in manufacturing concern there are more operations. In trading concerns there are less operations. Automatically it is understood that if there are less operations, less working capital is required. If there are more operations, more working capital is required. Now second stage is business cycle stage. During the boom period, more working capital is required. During the recession period, less working capital is required. Next, we'll see about seasonal business. This is also other factor. In this season, more working capital is required. In the season, the business turnover will be more. If the turnover will be more, expenses will be more. And to meet the expenses, what is required to us? Working capital is required to us. So in the season, more working capital is required. Then in the unseason, if it is not the season, less working capital is required. Then next, in competitiveness of the market is the another factor. In case of high competition, more working capital is required. In case of less competition, less working capital is required. If there is no competition, no working capital is required. Then other factors. We'll see about other factors of working capital. Credit policy allowed to supplier, credit policy of the business, and lead time or supply conditions. Based on this, also our working capital depends. Next, we'll see about types of working capital. One is permanent working capital, another is temporary working capital. Minimum level of working capital is going to be maintained in a business in this permanent working capital concept. Now we'll see what it is called as. It is also called as core capital or fixed capital. So just now I told you that minimum level of working capital is required irrespective of output level. Whatever might be the output level, the company or the business firm or the organization is going to maintain minimum level of working capital. Then, temporary working capital. What is temporary working capital? It is required based on the functions of the sales of a business. It is an additional capital required over the permanent capital. Next, we'll see sources of working capital. Long-term sources, short-term sources, and transactional sources. Long-term sources are obtained from equity shares, debentures, and other long-term liabilities. Short-term sources are obtained from bank credit, short-term deposits, and commercial paper. So these are the long-term sources for working capital, and these are the short-term sources for working capital. Now we'll see what are transactional sources. It is a part of short-term sources. That means in this short-term sources itself, we are going to use a part of it. we are going to use a part of it for transactional sources because it is spontaneous and transactional related nature. According to the transaction, we are going to use that amount of working capital. So for that purpose, we are going to use only from short-term sources. Now, I think everybody of you understood this concept. Thank you for watching. If you like it, share it and subscribe my channel. Thank you so much for watching.